take a look at how the U.S. did overnight. Top indices on Wall Street soared to record levels after the Federal Reserve launches its historic easing cycle with an aggressive 50 basis point cut. The blue chip Dow Jones Industrial Average gained 1.3%, while the S&P 500 surged 1.7%. The tech-heavy Nasdaq also rallied 2.5%. Better than expected jobless claims data further stoked global risk appetite a day after the U.S. Central Bank announced a 50 basis point reduction on interest rates on account of easing inflation. Over in Europe, UK's FTSE climbed nearly 1% following the Bank of England's decision to keep rates on hold. The German DAX surged 1.55%, while France's CAC 40 rallied by 2.3%. Now, Asian markets are set to open higher, with Japanese equities rising nearly 2% in early trade. Now, in the currency markets, the dollar index trekked lower, with the dollar index shedding 0.4% to 100.60. Now, gold rose more than 1%, while oil prices also climbed by more than 1%, but concerns remain on the health of the economy with the outsized interest rate cut. Benchmark Brent went up by 1.7% to 74, while the U.S. crude was at $71.41 a barrel.
We really did think we were going to get one of those sell on the news days. And in fact, we did. The market, zipped up immediately on the announcement yesterday, came back down when Chairman Powell had his press conference, and really ended the day flat. So overnight, we got some euphoria back in. And I think it's just the feeling and the confirmation that the Fed has pivoted. The Fed is no longer looking up, they are looking down. And that is a big change in where we've been.
U.S. President Joe Biden celebrates the nation's economic progress following the Federal Reserve's recent rate cut. In a speech at the Economic Club of Washington, Biden praised the rate reduction as a significant achievement in the ongoing battle against inflation. He also emphasized his commitment to continuing efforts aimed at lowering costs for American families.
Yesterday was an important day for the country, in my view. I'm not here to take a victory lap. I'm not here to say a job well done. I'm not here to say we don't have a hell of a lot more work to do. We do have more work to do. But what I am here to speak about is how far we come, how we got here, and most importantly, the foundation that I believe built for a more prosperous and equitable future in America. So let's be clear. The Fed lowering interest rates isn't a declaration of victory. It's a declaration of progress. It's a signal we've entered a new phase of our economy and our recovery.
Meantime, Republican candidate and former U.S. President Donald Trump has a different view on the American economy. During a visit to a cryptocurrency bar in Manhattan, Trump said that the Fed's rate cut shows that the economy is struggling. He also criticized the central bank.
I guess it shows the economy is very bad to cut it by that much. Assuming they're not just playing politics, the economy would be very bad, or they're playing politics, one or the other. But it was a big cut.
At a press conference earlier on Wednesday, Fed Chair Jerome Powell, a Trump appointee, emphasized the bank's independence, stating that they're not serving any politician or any cause. On another rival, Vice President Kamala Harris is calling the rate cut welcome news for Americans, especially for those facing high prices. She adds that her focus is to continue to bring these prices down. Now, the Philippines fall 3 spots to stay near the bottom of an annual ranking that measures a country's ability to attract and retain skilled talent. The latest World Talent Ranking of the Institute for Management Development shows that the Philippines has fallen to 63rd place out of 67 nations, with an overall score of 35.44 out of 100. Now, this marks the country's lowest position since 2005. Compared to its neighbors, in the Asia Pacific, the country is ranked 13th out of 14 nations and is now only ahead of Mongolia, ranked the lowest globally. The World Talent Ranking has 3 main criteria: an economy's appeal to lure international talent, resources allocated to nurture the local workforce, and the skills present in the current talent pool. Finance Secretary Ralph Recto invites Singaporean investors to explore opportunities in the Philippines' flagship infrastructure projects. At the Youth Philippine-Singapore Business and Investment Summit in Singapore on Thursday, Recto highlighted the forthcoming enactment of the Create More Bill. The measure, which is expected to be approved within the year, seeks to simplify business operations by reducing documentary requirements. It also exempts exports-oriented enterprises from value-added tax. Recto also tells Singaporean investors that the Philippine government is committed to facilitating their seamless participation in high-priority sectors, including digital technologies, clean energy, and food production. The finance chief likewise expressed interest in collaborating with top-tier Singaporean firms like the Changi Airport Group. The Maharlika Investment Corporation is actively exploring possible investment opportunities in the mining sector. The Inquirer reports that the country's sovereign wealth fund is already in talks with the operator of the Makilala copper and gold mines. Makilala Mining's flagship project is the Maalinao Kaigutan Biog project in the Cordillera Administrative Region. The mining firm is a subsidiary of Celsius Resources, which is listed on the Australian Securities Exchange. The fund stands to benefit from the potential investment. Gold prices are rising in the global market amid geopolitical uncertainties, while the demand for copper remains strong, as it's an essential metal for electric cars and renewable energy. Now, New Social Weather Stations, or SWS survey, shows that 39% of Filipino adults believe that their lives have improved compared to a year ago. Another 23% say that their lives got worse, while 37% claim that their lives remain the same. Results translate to a net gainers score of plus 15, classified as very high. This is a 10-point improvement from the previous survey in March, which had a fair rating of plus 5. However, the current score is slightly below the pre-pandemic level of plus 18 recorded back in December of 2019. Now let's take a look at some of the biggest corporate stories right here at home. Billionaire Manuel Pangilinan can finally close the book on PLDT's legal woes. This as the telecom giant finalizes a $3 million settlement to resolve a securities class action lawsuit filed by holders of PLDT's American depository shares. This lawsuit stemmed from allegations that the company made false and misleading statements about its capital expenditures and internal controls from 2019 to 2022. SMC Tollways, now part of billionaire Ramon Ang San Miguel Corporation, plans to raise up to 35 billion pesos from the sale of peso-denominated fixed-rate bonds. These funds will support its expansion programs. Now, the Lopez family's FirstGen Corporation awards a contract for a new liquefied natural gas cargo to Shell Eastern Trading. The Singapore-based firm will provide supply to FirstGen's gas-fired power plants in Batangas. And billionaire Chris Pau's kiosk-based food brand Potato Corner reaches a milestone with the opening of its 2000th store in SM Cebu. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
This is the Scorecard, where you score the latest news and in-depth views. I'm Anton Rojas, and this is tonight's Roundup. On the Scorecard tonight, feel like you're somebody who has that desire. Tell us about your experience. Get ready for a thrilling clash, thrilling hostilities, and keep your eyes on the prize. Sports is our business, and business is our sport. This has been the Scorecard.
10 p.m. on BNC, the Billionario News Channel. Weekdays on BNC, the Billionario News Channel. BNC, the Billionario News Channel, always on top.
Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened a few minutes ago. Let's take a look at the initial figures. Now, I'm looking at a sea of green right now. The market is extending its rally following the U.S. Federal Reserve supersized rate cut. PSE index is up by 0.8% to 72.62. Broader all shares index up as well to 38.96. All the sub-indices are trading in the green, led by the industrial, holding firms, and mining and oil counters, which are all up by about 8%. Now, to help us make sense of the numbers, we have with us Adrian Yu. He's the head of sales at COL Financial. Hi, Adrian. Thanks for being with us this morning.
Good morning, Maiki. Thanks for having me.
Okay, Adrian, let's start by talking about the Fed's supersized rate cut in the context of how it's going to affect foreign investor flows, because that's what's really going to move the needle here. That's what's going to take the PSE index to new heights. Talking about the doors that it's going to open for us, where do you see it taking the PSE index over the short to near term and over the long term?
Well, I think with what happened with the Fed cutting 50 pips, it clearly signaled that there's a risk on for risk assets, clearly equities, including the PSEI for the emerging markets. We've seen this impact on the dollar, the weakness of the dollar, contributing to the strength of the peso. In fact, foreigners have been net buyers for the last, I think, 14 sessions, including 14 straight sessions yesterday, which brought the index to, I think, the 7,200 level at this point. And moving forward, we still think we have significant upside at this point, assuming there's the continued strength of the peso, and we could see the index push higher.
Okay. How much higher, Adrian? How much upside?
Well, at this point, we have a research bottom-up target of 8.2 for the PSEI. We've already seen the PSEI rally 11% this year, and there's still another 14% upside. So we think that there's a good chance, assuming we don't see any more negative news come out, we could see this potentially late this year or early next year.
8,200, that's a very bullish target. Is that your target for the PSE index for the end of the year?
Well, that's our research bottom-up target. Initially, we pegged it at the 7,200 level, but we're already here. It's quicker than expected. I'm not sure if we could get there by the end of the year, but fundamentals suggest that 8,000 is a very reasonable level for the market to get to.
Mm-hmm. Now, before we get there, right now we're at 72.62. From a technical standpoint, at these levels, would you consider the market overbought and perhaps ripe for profit taking?
The index overall, it looks quite stretched considering the sharp rally we've seen. It's poised for a pullback, so we could see a pullback. But overall, I wouldn't be too quick to take the profits, considering the foreign are just starting to come in. So I will be taking some profits off the table on certain issues that are extended, and I'll be looking to rotate to other issues that are still breaking out from support.
Mm-hmm. Now, on the local front, the central bank was ahead of the curve in terms of rate cuts. Given the Fed's supersized rate cut recently, how do you see the BSP responding to this? How much of a rate cut are you anticipating now that they have the latitude to move in a big way?
Well, we think for this year, I think there's another 25 basis points. I think the market has largely priced that in October. And the BSP still has a chance, if ever they decide to do so. They can still cut another 25 bips by December, considering that the market is pricing in another 50 basis points by the U.S. Fed for the year to bring it to a total of 100 basis points cut for 2024. But at this point, we think 25 is in the bag. 50 is quite possible, especially with the continued strength of the peso.
Okay, now on another front, the central bank is looking to cut the reserve requirement ratio of banks. How do you see our market benefiting from this, particularly the banking stocks?
Well, at this point, if they cut the reserve requirement ratio, they've already been saying this that they're planning to do so. It's going to increase the liquidity in the banking system, so it's going to make it easier for companies, for banks to lend. They'll have an opportunity to lend higher, but we think that the cutting of the policy rate should play a larger factor, as this will increase the demand and make borrowing cheaper. But still a positive development for banks, as it will allow them to improve their loan growth.
Now, speaking of loan growth, this is especially going to help the banks with a higher position of time deposits because they're going to be benefiting from the lower interest rate environment. That said, what are the specific banks that you see benefiting from this scenario?
So we've actually seen these two stocks, in particular, off-index stocks, rally quite significantly in the last couple of days. It's CBC, China Bank, and Security Bank. They have one of the larger portion of time deposit as a source of their funding. So as the policy rate cuts, their funding costs will drop faster compared to the big three banks. So we can see an expansion in the net interest margin for these two banks. And we think that although they've rallied quite sharply, investors should do well, look for pullbacks in these two particular stocks as they're the biggest beneficiary of the rate cuts.
Speaking of those rate cuts, sectors exposed to high debt levels are likely to benefit from the lower interest rate environment. But in terms of debt levels, would you say that publicly listed companies are not over-leveraged because interest rates in the Philippines have been so high, and now is the time for them to really invest in their CapEx plans?
I think Philippine companies traditionally, even before the pandemic, their balance sheets weren't quite stretched to begin with, as interest rates were never as low as they were in more developed markets such as the U.S. So on that front, although we will see some savings from lower debt service and interest expense for these companies, we're more excited about the prospect of companies who should have done some capex a long time ago and delayed their capex. In fact, we've seen numerous companies reduce their capex over the last couple of years, given that the cost to borrow was so high. So we're quite excited to see how this potentially impacts the property sector in particular, as the lower cost to borrow money might spur their decision to increase their capex over the next couple of years.
Okay, last question, Adrian. In terms of the interest rate sensitive banking and property stocks, what are the specific companies within these sectors that look very attractive to you, given the direction?
Well, on the property sector, we want to take advantage of companies that have a higher exposure to the residential segment. We think that both from the customer and from the developer side, the reduction of the interest rates should benefit them nicely. In particularly, we like Ayala Land. Ayala Land has more than 50% of the revenues come from the residential sector. Largely on the higher end sector, and the higher end segment. So we think that this should increase the demand for these projects, and I guess with the growth, also for the company to increase their exposure in land banking or other growth in the residential segment. In the banking sector, I mentioned it earlier, we think that profits will still be good. The RR cut should increase liquidity, improve their net interest margins. And the two particular banks that we're excited about, off-index banks, China Bank and Security Bank, given their high portion of TDs as funding, we think that they'll benefit quite nicely and potentially see much higher upside in the near to longer term.
Okay, China Bank, Security Bank, and Ayala Land. Thank you so much, Adrian Yu, the head of sales at the COL Financial Group.
Thanks, Maiki. Thanks for having me.
Now we're taking a quick breather. Basis Points. We'll be right back.
Welcome to Pathways to Success, a program that supports micro, small, and medium enterprises. I'm Mai Rodriguez.
We are giving spotlight with this innovative business enterprises that shares growth in our community. We support giving these entrepreneurs a chance to fuel their business and be known in the market. Take a look inside their stories, challenges, and success.
The more you learn, the more you earn. For more inspiring stories here on Pathways to Success, here on the Billionario News Channel.
I'm attorney Karen Jimeno. Join me at the forefront as we zero in and discuss the details of some of the most pressing national issues that our country faces.
You mentioned there are 5 PNP officials who are also involved. Who are these 5 PNP officials?
What makes the PAOCC more effective in dealing with organized crime? the political scene, and government issues. These should be our concern, and we're taking you at the forefront.
Welcome back. The Bureau of Immigration arrests the older brother of former presidential economic advisor Michael Yang. Yang Jin was nabbed at the Ninoy Aquino International Airport after arriving from a flight from Cagayan de Oro. Yang, who also goes by the alias Antonio Lim, is subject to a mission order by the Immigration Bureau. The agency reports that he's facing a deportation case for undesirability and for misrepresentation. This after he allegedly misrepresented himself as a Filipino and falsified information regarding the SEC certification of Phil Sanjian Corporation, which he owns. Yang is now in the custody of the Presidential Anti-Organized Crime Commission. Now, some 530 Filipinos are repatriated from Lebanon amid rising tensions in the Middle Eastern country. On BNC's agenda, Migrant Workers Secretary Hans Kakdak says that they are prioritizing the evacuation of Filipinos in border towns along northern Israel and southern Lebanon. This as about 11,300 Filipinos are living in Lebanon, with most in the capital of Beirut. The nearly year-long conflict between Israel and the Lebanese armed group Hezbollah has escalated, especially after several Hezbollah radios and pagers exploded earlier this week, resulting in 37 deaths and around 3,000 injuries.
We are encouraging our citizens, our OFWs, to avail of the voluntary repatriation program. Pinag-utos ng ating Pangulo, libre ito, no? And pati yung in-country, yung reintegration assistance, binibigyan natin sila ng 150,000 at least na financial assistance pagdating. At yung itong mga recent na pagsabog ng mga pagers at walkie-talkies, very precise naman ang targets, hindi mass bombing o karamihan ng tinatarget na mapinsala publiko, kaya hindi natin pa nakikita, no? Hindi natin nakikita apektado ang mga Pilipino.
In other news, electric vehicle giant Tesla of American billionaire Elon Musk is set to make its debut right here in the Philippines. Tesla will launch its flagship store and showroom in Uptown Bonifacio in Taguig City. The store, which is set to open later this year, promises to offer a comprehensive range of Tesla vehicles and services. This will be the company's fourth Southeast Asian location, following Singapore, Thailand, and Malaysia. Its entry into the Philippine market is expected to boost the adoption of electric vehicles. Now, elsewhere in the world, Elon Musk's social media platform X is facing another setback in Brazil as the top court orders it not to circumvent its ban in the country. This follows a recent update that made X accessible to many users in Brazil on Wednesday by circumventing the court-ordered block. As a result, a fine of 5 million real has been imposed on X. Brazilian Justice Alexander de Moraes, who has been in a months-long dispute with Musk, claims that the company is disrespecting the country's judiciary. The court banned X in Brazil last month due to the alleged spread of misinformation and hate messages on the platform. Now, in Vietnam, a property tycoon who is already on death row for the country's biggest financial fraud case is going on trial again. This time, Truong My Lan and 33 other defendants face new fraud charges, as well as accusations of money laundering and illegal cross-border cash trafficking. Lan and her associates allegedly laundered around $18 billion by taking assets from the Saigon Commercial Bank and issuing bonds between 2018 and 2022. A total of $1.5 billion was supposedly transferred to foreign countries, while Lan received more than $3 billion in illegal transfers from abroad. Back in April, Lan was sentenced to death for bribery and embezzlement after ordering SCB officials to approve over 2,500 loans to shell companies she controlled, causing the bank to lose about $27 billion. Now, before we go, there's a change in leadership at sneaker giant Nike, as its CEO, John Donahoe, is set to retire on October 13th. Taking over his role is company veteran Elliott Hill, who is coming out of retirement to return to Nike. Donahoe, who has been CEO since January of 2020, will stay on as an advisor through the end of January to ensure a smooth transition. Hill worked his way up at Nike, holding senior roles over 32 years before retiring in 2020. Next month's leadership shakeup comes as Nike seeks to regain momentum amid increased competition from other sneaker brands. And that's it for Basis Points. I'm Maiki Oreta. We'll be back next week for news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.
This is Pinky Webb, and it's a great opportunity. Ang inyong lingkod si Corina Sanchez Rojas.
Corina Sanchez.
As they uphold their mission is to be proud
Dalawang
of what we
mamamahayag
do with
na
our
subok
lives.
sa tapang at talino.
To talk with all of you. Maraming salamat.
Pagsasamahin ng isa. Agenda. Mondays to Fridays, 6 p.m. only on